Hi, and welcome back to the Mortgage Broker broadcast. My guest this week is Dave Coleman. Dave was on the podcast, episode 47 it was, and we got into a lot of detail with Dave regarding his social media, his content, his personality, and why he does and why he does it. And we sort of did run out of time a little bit, so I wanted to get Dave back onto the podcast, explore a little bit more. He talked a little bit about second charges. We're going to talk about those in a little bit more detail, and then also as well moving on to talking about his social media again in a little bit more depth than we did before. So let's get Dave on the podcast. So welcome back to the podcast, Dave. How are you?
I'm very well, thank you, mate. Very well. Thanks for having us back on.
Good. No, I appreciate you agreeing to come back onto the podcast, and yeah, it's just great. I think the first one, what was it, episode 47 when you was on, and we went through so much. There was no agenda. We just went off piece and off tangent and ended up talking about loads of different things. And I think it was just there had to be a follow-up because 40 something minutes into a podcast, you know that you're getting a lot of content out there and you're having a really good conversation. So it naturally meant that we needed to have a part two, shall we say, and just explore a few little things a little bit more that we maybe didn't talk about, but who knows? Let's just sort of see where the conversation goes. So I appreciate you taking the time to come back onto the podcast, given your busy national schedule right now.
Everything's busy at the moment. You probably validate that as well. It's life is busy. It's ridiculously busy, but yeah, it's all good. Busy is good.
Yeah, it is. I like to say it's busy is good, generally good. You can be busy and a busy fool and not being productive and wasting time and stuff like that. Whereas you must feel like you're on a national tour right now. You must feel as though you need posters explaining where you are and sort of some promotion and going on giving where when I look at your social media, it seems to be a new shot every morning of a different suit, a different tie, different handkerchief, and a different city.
Yeah, there is. I'm covering a lot of miles at the moment, but again, yeah, I think that's one of the USPs of of positive is that it doesn't matter where you are in the country, we will come and support you, whether that's your own conference, your own team meeting, or it's a session or anything like an event. We'll be there to support, which is what we're here to do: support intermediaries in the market.
No, it totally is, and I think that's the sometimes you're not afraid to get out there into the marketplace. I know that Andy did a great session. I was lucky enough to be away for a week or so, and Andy did a great session with advising the firm, and I've had great feedback on that. And obviously, this it's it's good that you are putting that input in to then understand businesses more. Like I've seen you've been out with Mortgages First recently. That was something you went and did. So it's important that you build out there back into the marketplace, building those relationships and not hid behind a desk and making excuses about the number of miles you're doing.
No, absolutely. I think anyone that's a BDM account manager gets into it because they like traveling around, they like meeting people. Otherwise, they're probably in it for the wrong reasons.
Yeah.
But yeah, I mean, you can't beat the face-to-face value, and like the conference we done for Mortgage First on Friday was amazing. You know, the whole firm was there. I've only ever met, other than the owner, everyone via a computer screen. And to
Right.
meet all these people that I've been talking with and working with and presenting to over the last 2.5 years in person was fantastic. And again, you know, the value of what that added, I walked away with 3 inquiries before I'd even left the venue that day. And I think Andy's hand ended up with a handful off the back of it as well. So again, it just shows, you know, by going out and doing what we do, which is all about education, awareness, opportunities, market opportunities, discussing all of those things with brokers and intermediaries in the market. That's the value we bring. Yeah, it helps them recognise the opportunities and generate more income.
It does. And the one thing you said in there, which is awareness, so that you are out there building. And I think making brokers aware of positive and what you do, but more importantly, who you are and who Andy is and your values. And brokers really appreciate you taking the time to go out and speak to brokers. I think especially now, like even more so, it's like brokers should appreciate who you are and you actually taking time in your busy schedule to put the miles in and do the tours and be the face. And like I say, it's a win-win for everybody. You've like brokers are you're helping brokers place cases. it's a win for them. It's a win for you because you're walking away with inquiries. Then why would you not do it?
Absolutely. All that we need is the opportunity to be in front of people and people to listen. And the majority of brokers in the market are more than keen to do so. And let's be honest, everyone needs a free pen at the moment because no one's had pens for the last 2 years. So yeah, but it is that, and I think, you know, everyone in the market that I speak to on a broker basis has never been busier. The market is just crazy at the moment. It's very buoyant. There's a lot of activity going on, and there's a lot more stuff that doesn't fit within the mainstream world, and there are a lot more hurdles that are current and also probably will be coming up through the year as we move forward that will prevent traditional lending options being a solution for the client. So again, that's where we come in, to open the eyes and make aware of the opportunities and solutions that we can provide to help those situations.
Definitely. I think one thing that you sort of hinted on and talked about on the other podcast, the previous one, was about second charge. So we're going to talk about a little bit about second charge. Obviously, I want to get back into detail about your content because a few things I also want to talk about from that point of view and recent trends that I'm finding from with your social media stuff that I wanted to explore a little bit more. But second charge was something that you clearly see that it's going to be big business in 2022.
Absolutely. I mean, that market was affected heavily by COVID, as you can imagine, as with a lot of stuff was. But I mean, our second charge mortgage desk has grown by 300% this year alone. The activity that's coming through on that, and there is a lot of rationale behind that as well. It's not that lenders have just come back with amazing criteria. I mean, that they do have outside of the normal criteria, obviously, but it's not as though everyone has just ramped the criteria and USPs up. It's actually that the market is changing, and actually there's a call for that finance. And you look at sort of where we are with the economy at the moment. Cost of living is going up in every factor of our lives, you know, whether that's utilities, whether that's fuel, whether that's groceries. The only thing that's not going up is our salaries.
Yeah.
So
Yeah.
the cost of living and affordability is going to become tighter and tighter. And we've already seen some mainstream lenders come out in the press and say they're going to be reviewing that and maybe tightening up on that area. And again, as we go forward and things increase in price, well, when clients are going to want a capital raise, they're probably going to struggle or potentially struggle with mainstream lenders. In a second charge world, you've got lenders with higher income multiples and affordability models. So actually, the opportunity for them to capital raise is there. You've got higher LTVs. On a residential basis, you can actually go up to 100% LTV now, which is pretty crazy, pushing boundaries.
Yeah.
Again,
Yeah.
if you've got properties that are down value, or the loan purpose isn't deemed suitable for a further advance or refinance, then actually that second charge could be a viable solution.
I think and it's awareness, isn't it? That's the sort of thing. If you're particularly as we've seen recently and in the past since the pandemic, you look at the number of mortgage brokers that have come into the industry with no experience whatsoever. You start talking to them, you getting those inquiries that you're sort of seeing. They're struggling they haven't got the help and support to place mainstream stuff. Never mind what's it like. And I think I've sort of seen and heard about it where people are sending business away and turning down business because of awareness. That's the big thing. What you sort of said on there, which was great to start this topic, was brokers need to be aware of the solutions and options that are out there for these client scenarios, because not everybody, we talked about it on the first podcast, not everybody comes off, you go on a course, nobody talks about, you're on your induction course with a network or a firm, they don't talk about second charges. Everybody's got a 15% deposit, first time buyer, never had a problem in their life. Whereas second charges, what's odd, and they'll just sort of dismiss it and put it to the side, but actually opening up their eyes and making them aware of the options that are available benefits the broker, benefits you as a potential lender, and benefits the client because it's a way out for them that they didn't have and an option that they never thought about. So it is awareness.
That's absolutely correct. And it's a second charge will typically only be a consideration where, you know, a mainstream lender isn't able to help or doesn't provide the best outcome. And, you know, that could be because the client's tied into a fixed rate product with an ERC. So actually, rather than paying that £8,000, £10,000 ERC to come out that mortgage, they can capital raise immediately until that ERC is gone, and then refinance at that point without incurring the cost of that. If the affordability model is tight, we're seeing so much debt consolidation at the moment. And there's several factors why a broker may struggle with that when it's high debt con, because mainstream lenders, once the debt to income ratio gets too high, they're uncomfortable doing it. It's typically quite difficult to get a high debt con case through via a network as well.
Yep.
Again,
The
from
high
a broker,
risk.
yeah, absolutely, yeah. And from the broker's point of view, they alleviate all that risk because it's a referral to us, and we're responsible for the fact finding, advice, and everything through to completion. But second charge lenders are equipped and built to take on those kind of inquiries. And again, for the broker, like you've just highlighted there, the broker is able to help their client in the here and now. And maybe in the period of 2 to 5 years, they're back in the picture, revisiting that client and refinancing that back into a mainstream mortgage again, because the client's demographic has changed and actually it's suitable for mainstream lenders to take back on again. So that client retention and customer journey continues, which is what any broker wants. They want to build up their client bank and retain clients. So it helps them do that.
Definitely, I think the big thing is about the retention. I think that's if they're not talking about options for clients and they're not talking about second charges and not aware and they're not confident and they haven't got that knowledge, they then let that client go into the wilderness and find their own
Yep.
solution with second charge. It's just, again, like you've worked so hard to get that client in the first place. You've been doing all the social media stuff, doing all the things you've been doing to generate leads. You've then signed them up on but then if you've not got the awareness of the option when they need that second charge and you send them away, you're just having a greater risk of losing your protection sales, losing the remortgage, losing that client for life when you've worked so hard to build them up in the first place.
That's exactly it. And if you're not doing that deal, well, someone else in the market will probably be picking it up because they are aware of that. And no one needs to be an expert in second charge, other than us. Obviously, we need to be
Yeah,
because we're doing it. But it's about the light bulb moments and just recognizing the key opportunities. Right, where it doesn't fit here, it could look at this, and that's when they pick up the phone to us, have a conversation, and we can sort of look and see if there's an opportunity to provide the client what the client needs.
I think, and that's it. When you go back to everything that you're doing the awareness and getting out on the road and educating the brokers from a broker point of view. I've got that awareness. I've got that understanding. I'm now more educated in the products that are out there. It's just providing the right solution for that client to make sure you retain it. And it's not all, it's just about the service, but it don't have to be. If they've got that relationship with yourself or with Andy and with anybody in the firm, you're more likely to pick up the phone and just speak to somebody about it rather than go, "Oh, I'm not going to bother them with that. I'm not going to queue or half," which I'm not saying they go through this
Yeah.
process with you, but they do with other lenders. It's a case of, I'm not going to spend half an hour, 45 minutes, an hour trying to get through to some, not all sort of lenders are like this, but are not offering the same kind of service that I would expect. If they've got that trust with yourself and Andy and the rest of the team, just pick up the phone. You're more likely to pick up the phone than actually not, which is a big thing for you as well.
Yeah, absolutely. And I think that is it. It's there's two ways of looking at it as well, because you get something like a second charge or another specialist product that lands on your desk. You could spend a lot of time trying to research it and find out where it could be placed. Actually, that's distracting you from your bread and butter business and clients you could be helping in the here and now. Whereas actually, you can refer that client across, speak to us indicatively before doing that, but refer the client across, and we can pick up that workload for you and take it off your desk. The beauty of it for the broker is, well, the client's being serviced, they're getting what they want what they need, and the broker's getting paid at the back end of it without having to do a lot of work as part of that process. And everything we do with regards to Zoom sessions, team sessions, face to face, and conferences and stuff like that, if we've done our job right, there's no hard sale for positive lending. It's about the opportunities within each of the products that we can help with in the market and making brokers aware of those opportunities. If we've done that right, then the phone will ring and we've done our job well. Simple as that. There's no hard sale about how much business you're going to give us and where's it coming from and so on like that. It organically happens off the back of a conversation and a presentation.
I think, are you sort of finding any trends with regards to second charge in terms of areas, typical clients, anything like that that brokers can sort of be aware of, or?
It's a real mixed bag. I mean, there's more adverse in the market now, but I think there's more adverse across everything we do, whether that's a first or second. But
Yeah.
again, if a client's on an existing mortgage, they've picked up some adverse during COVID, during furlough, for whatever reason, that may prevent them from refinancing or refinancing at an attractive rate. So again, a second charge could be used to help them with whatever they need to do now. And once the adverse is far enough in the distance, well, again, the broker will be back in the picture and wrapping that back up into the first charge because that's the right thing to do for the client. There's clients that, and this is just feedback I'm receiving from brokers, that are starting to panic because mortgage rates are going up, interest rates are increasing. They're now looking to fix in for maybe a longer period, maybe even come out of the product they're in at the moment and fix in. So again, with the early repayment charge that comes with that, capital raising may be difficult via a mainstream option. So a second charge comes into play. Debt con is huge. Two areas we're seeing that at the moment is clients that have actually used credit to survive furlough, maybe loss of job, change of job along that period. Doesn't mean that there's any adverse in there, just means that the debt has been used, credit has been used. Or clients have actually used unsecured credit to do home improvements where they couldn't capital raise during COVID, but now are starting to feel the pinch, or the awareness of actually how much that's going to cost them on a monthly basis is starting to creep in. So they're now looking to consolidate that unsecured credit into one. And again, 12, 24 months down the line, the broker, is back in the picture and revisiting the high street again to see if that can be refinanced into a mainstream lending option.
And to be honest with you, Dave, I do agree with you. From the firm's point of view, we are seeing more debt con cases come through, which traditionally networks, firms, it's a bit of a panic button. You sort of like get the bat. I get like the bat phone coming on to me going, you have like a debt con red phone in the corner saying, oh, somebody's got a debt con case, and the phone rings. It's like, Craig, where do I start with this and what help and things like that. So you do have that panic moment with debt con, but I think you've got to be aware as a broker that people get into situations for various reasons, and you've highlighted a few there in terms of, especially with the cost of living and things like that going up with the gas prices and the fuel price, everything like that. People going back to work, traveling again, commuting again. It's a more of an expense than it's ever been before. So DebtCon, I'm glad you said that because we're finding DebtCon is coming up and becoming more apparent. I think it's a case of let's just not press the panic button. Let's not pick up the bat phone and start get the red light going on. It's just let's understand the client a little bit more. Do your fact find, do your again, and understand that client, and then provide the right solution with them. Because there's a few brokers that would panic and just go because they've got the red flag from the network or the FCA. They see all these things going on. It's like, well, it's a bad thing. So I need to step away from it as soon as I possibly can and distance myself. That's not always the best interest for you as a broker. It's certainly not the best interest for the client a lot of the times. And yes, there are serial debt con clients out there that it's not right for. However, it's right for the right people with all these sorts of things. So I'm glad you sort of said you're finding more of that and providing a solution for that, because I think debt con is only going to go one way.
Well, I don't think we've seen the full extent of it, because there will be a lot of aftermath from furlough and everything like that, where people have still not sort of revisited or paid attention to what they've actually done during that period. So I think DebtCon is only going to increase. And let's be sort of realistic about it. If you, the broker, can provide a solution outside of what we're offering, well, then you'll do it. It's only when you don't have the solution, or it doesn't provide the best outcome, then you would consider something like a second charge. And let's be honest, your client phones you up and says, right, I want £50,000, £100,000 for whatever reason. They don't know whether that's a remortgage, further advance, or second charge. They just want the money.
Yeah.
That's where you come into play and you go, well, actually, we can't do it this way right now, but this is what we can do. And this is what the customer journey is going to look like. And this is how I can add value to you, Mr. or Mrs. Client. And this is what we're going to do for you. And they end up with the result result they wanted, which is getting their cash. And then, like we've talked about, the customer journey and retention stays there as well. And we're also seeing it that if the client's looking to capital raise by a remortgage, well, actually, by putting them onto a higher LTV banding, their rate might increase. So actually, what we're seeing is a lot of brokers opting to do a product transfer today, put the client onto a better offering, maybe for a 2-year fixed, and then immediately capital raise by the way of a second charge. So rather than refinancing the whole
Right.
mortgage into a higher rate, they can lock in the main mortgage on a better rate, capital raise the additional amount for whatever loan purpose, that's home improvements, debt consolidation, cars, tax bills, whatever it may be. And then when the time is right, well, then you'll revisit that again and then look at refinancing if that's the best thing for the client to do.
So tied into this, which leads me on nicely, because I think we've looked with the idea of today, we're going to talk about second charges, but then also talk about your social media. So you've talked about trends in the marketplace that you're seeing,
Yep.
but what we're not seeing is Dave Coleman social media forced down the neck of products, rates. This is what we're seeing in the marketplace, kind of thing. From positive lending point of view, we're still seeing Gus, Henry, your partner, we're still seeing that, which would be so easy. So a lot of the brokers would go, "Oh, I'm identifying this trend now. I need to get that out in the marketplace, and now I'm going to provide a solution for that." Which is, I accept all that, but you don't do that. Your strategy is still Dave Coleman, personality, and the one thing that I looked at, and when I reviewed your social media, I did it before, and I did it again for today, was that everyone I speak to talk about an 80-20 rule of 80% is business on social media, 20%. So you post 5 days a week, 4 posts about business, one post about personal. You are flipped that totally on its head, and it's probably 90-10 from that. I was scrolling through thinking, wow, I'm 3 weeks on, gone back on the lag, and I'm still not seeing anything about sort of business. Oh, he's there in a suit, and then he's there in a tie, and things like. It's still about Henry and your partner and Gus, obviously. So, what is that? Or have you always thought that way? Is that just something you just find it easy to do?
Do you know, like the reason it works, and I know that it works, is that if I walk into a meeting or I start a meeting online and someone we've met before, maybe not even met before. I mean, Friday's conference was a great example of that. Everyone was like, "How's Henry? How's your baby? How's his teething going?" Before they'd even started talking about what we could offer and what we could do. And I think when you build up relationships and you're going to see people after a few times, a handful of times, actually a lot of the conversation you have is general life. You get to know each other, you know what makes each other tick, and you find out what your interests are and stuff like that. And then the part of it is business, which is what you're there to do, isn't it? But it's not drumming, like you just said, it's not drumming the products and the criteria and everything down your throat. You're not talking at someone, you're talking with someone. And there's a difference between having a conversation and telling something just repeatedly, your voice just talking at them. So for me, it just works on that basis. I mean, it's the fact is they're just my life. That is my life. They're everything that I'm about, what I go to work for, what I strive to be successful for, all of that kind of stuff. And I'm like, obviously you've seen on LinkedIn, like I'm so proud of my son. I love him with everything. But he is a conversation. He needs his own LinkedIn page, to be fair. But but it kind of works in that way. And everything that comes up, everyone asks about each different factor and stuff like that. I've had people come up to me and going, "Oh, I'm quite into Lego too," or whatever. And have you got this set or whatever? And it's just we're all human, and that's what people buy into.
I didn't want to mention the Lego bit. I put a big thing aside saying, "Don't turn that." I was joking, obviously. But the thing is, like, you get traction with it. It's when you look at. I know you don't do it for the likes. I know you don't do it for the follows and things like that. It is you getting out there who you are and what's important to you in your life, which credits you. We clearly see that. But you get a lot of traction with it as well. You do get a lot. I think because it is different. Do you find that you get more likes because it is more about personality? When you do the business one, does it get less interaction and less likes?
You're absolutely right, and I think With the personal side of things, people can probably feel more comfortable interacting with that without showing who they are or what they do. You tend to find when you do a business post that although you might get the views, people will be lurking in the background. They don't want to show that they're a broker and liking your post because they don't want to show that they're working with you or potentially thinking about working with you, or they don't want to show their competition they're doing that as well. So there's all those different elements in the background. And actually, it's very relevant to a lot of us. That's the industry we work in. But I think from my perspective, when I'm doing conferences or Zooms or face-to-face meetings and stuff like that, well, the content I'm going to be talking about is what I'm going to talk about then. The icebreaker is your Henry, your Gus, the Lego, the thing I cooked on Saturday night, or the restaurant we went and ate at, or whatever it may be, or the DJing, or whatever it may be. And everyone can relate to having a dog or a pet or a partner or a baby or a sleepless night or whatever it may be. Someone somewhere can relate to that, and that's the icebreaker. And I think it's fair to say if everything was business all the time, we'd be robots and we'd be very boring. And as much as our industry isn't boring as such, because there's always something going on. It's very vibrant at the moment. There's a lot changing. There's a lot of activity. But if you were just talking about that all the time, it'd probably switch people off.
I think when you look at the posts you do and you talk about sort of relate to it, so that's the thing. If I've not got a baby, my son's 16-year-old and bothered about his motorbike right now more than anything else. I'm not, but we've got a dog. So when you're posting, I'll see Henry and obviously I'll look at that and pay attention to what you're doing. And I don't necessarily relate to that at that particular point because he's 16 now and sort of going through that kind of journey. Whereas with Gus, because I've got a dog, you then feel as though you relate to it. And yet you're covering all bases because when you post about getting out for a night out and rather than sort of babysitter and things like that, it's reminiscent and people are relating to that and going through the same things. And that people just want to feel part of something. People just want to feel as though they are normal. So when you post about Henry, when you post about Gus, when you post about your partner, like you said, everybody can relate to that. So then there's a feeling of community, there's a feeling of it's okay to comment on that rather than the business stuff when it's like, well, I don't work for Positive, or I'm not this, or I'm not that. I don't have that role. I'm not. And there's the guarded hat that people put on that, where there's the likes of yourself, with something like Lee Rowland, who is very much, he doesn't put anything on about business on his social media. He's now got his bloody daily weather report on
That's it.
what's going on in South Wales. But people are relating to that because the weather, everybody talks about the weather. So it's just, we can relate to it. Well, what's it like down in South Wales? Well, it's this today. People are coming to say, well, it's grim up north, or it's this and that, the other. It's just, people feel more comfortable and relating to that and will interact with that. But you're doing all this on your own personal brand, because then when people do need your help and support, they're more likely to reach out to you. Like Lee. I know Lee is very busy. He's booked out for weeks in terms of appointments and people reaching out to him and the inquiries. But that's not happened overnight. You've been doing LinkedIn for a long time. We talked about that on the first podcast. Lee's been doing the personal stuff. He don't post really anything about business. It's just weather report or reviews, generally speaking, from his point of view. For you, it's the same thing. You post the odd thing about, like you said, being at Mortgages First and doing that, being part of that conference there. But it's just all people want to feel as though actually I can relate to that and I feel comfortable that in this kind of work, in this space.
That's exactly it. And I think, I always try and put some kind of link back to a work way in the post in some way or another. But everyone can relate to having a horrendously busy week. And don't get me wrong, I love being busy, but it has never been busier. And the job can be tiring and tough because you're traveling long distances, you're out and about. You're coming home, you're having sleepless nights because I've got an 8-month-old baby. People can relate to that, whether that's now or past or whatever it be. And having a night out or having a beer on a Friday night or having that nice bit of food or getting home from being away for 3 days and seeing your your child for that period of time. All of that is relatable, and it's what makes us human.
Yeah, absolutely. And it's just that personality that we can see from, if you say, being away for 3 days, or that joy of you walking through the door and seeing Henry's face for the first time is what you, and why you do what you do. Like that, you
Absolutely.
do.
Yeah.
And I get that. That's the thing. Is sort of like you post. I keep going back to the Gus bit because obviously I can relate to the dog thing.
Yeah.
But like when you walk through the door and Gus sees you, and there, it is unconditional affection and love that you get from that. And when they sort of see you for that, and if you're not warmed by that when you walk through the door, then for people everyone will relate to that. Dogs are part of the family. You posted about that, and I'm a firm believer in that they are. I lost my dog back in November last year, and he was sort of 10 years old, and I was absolutely devastated. Like at the time, I'm still am now. Like it's difficult to talk
Yeah.
about, but at the time you sort of, and you post about, I couldn't imagine without being there. Absolutely, but that just makes you human. That's all it is.
And I think that's it. As I think that any relationship along the way, in personal life or business life, whichever it be, people buy into people. People want to know who they're working with, or who they're spending their time with, and that's where friendships are formed and relationships are formed, business or otherwise. And it is exactly that. It's that human part of it. And at the end of the day, it's easy for me to post about stuff. I've got a gorgeous dog. I've got a gorgeous baby. I've got a gorgeous partner. Yeah, I'm quite handy at cooking, so that always helps as well. But it's all. But it is just general. My general stuff that I do and what I get up to and whatever else. But it's the human side of everything we do. And
Yeah.
it's like, I think you just said it. It's for me, it's what I get up to go to work for, and to work towards and be successful for, and everything like that. So
Yeah. And I think the thing is, you will have, like you say, you'll have really good days, really bad days, really busy weeks, really bad week. Everyone goes through those situations and goes through that emotion and the roller coaster. Working in the mortgage industry generally is a roller coaster ride for everybody that's involved in that kind of thing, from a client point of view to a broker point of view. But if you've got to have that sort of the why at the end of it, and really you understand, enjoy that part of the time as well, and that's important for you as much as anything else. So
and that's exactly it. Look, I think you can enjoy your job, and I generally do enjoy my job. I love it, and especially now we are out and about in the world again, seeing people face to face. But you kind of also enjoy your downtime and your family time off the back of it, whatever that looks like. And it's that balance, isn't it? And it's not
yeah,
everything is work, 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 work. And I always find the most productive meetings I end up doing, whether that's on a group basis or a one-to-one, a good percentage of that is always talking about the personal stuff, whether that's your holiday, whether that's your dog, your baby, your children, whatever that may look like. And then a bit of business is thrown in for good measure. But actually, it's probably a bit more well received because you're having a human interaction and a real life conversation that's going. It's all relatable stuff.
yeah, totally agree. And that's it. Just makes it a far easier conversation when you've got that rapport building and that trust built up from the start, and it's relevant, and you can relate to. There's a mutual respect and a mutual like there's something going on between them, that connection there between you and who you're talking to. So
Yeah.
Dave, again, thank you so much. Like I threw in there with no agenda, and you went for it, and we end up talking again for over half an hour just about second charges and obviously social media content. We probably could talk all day about those sorts of things, and get into even more detail. But we have all got busy lives, and you were incredibly busy at the moment. So I really do appreciate your time and taking the time out to come back on the podcast.
No, not at all. It's been great being back on. Really enjoy it. And I love the no agenda rule. It's brilliant. It's great.
Good. Thanks ever so much for your time, and
Thank
hopefully
you.
we'll get you back on. Probably not as quick as that, but we'll probably get you back in later on in the year talking about second charge and where the year's gone and stuff like that. But first of all, for now, thanks very much for your time, David, and your honesty and your relaxed, informative outlook.
No, you're welcome. And thanks for having us again, mate. Cheers.